use of technology and the advantages of technology, there is nothing to quarrel or nothing to debate about.
Yeah.
The problem is that the ecosystem readiness. Today in the commercial banking space, or for that matter in the co-origination space, because we also have 4 or 5 partners with whom we do co-origination, the problem is insufficient credit history. The bureau scores that we rely so heavily upon, at least 60% of the intending clients will come with -1, which is insufficient credit history. And this insufficient credit history, how do we deal? We again go back to the traditional method of doing appraisal, which is a combination of historical and projection and, based on cash flow analysis or whatever we use, what we call in banking parlance, the NAAC committee recommendation, where we project a turnover, validate the turnover and give 1/5 of it as the working capital requirement or whatever. Now, see, one, as I told you, is the necessity of, making the ecosystem ready. And during that period, how players can operate on a bimodal mode. I call it bimodal, what I think Mr. Nath rightly told, that whether, we can talk in binary, whether something is completely digital or something is completely physical. It will not happen. It will stay in a bimodal, and bimodal technology is different from complete digital technology.
I agree.
We used to tell, when wealth management used to be the fashionable term and a lot of people were coming to wealth management mode, they were mentioning, and in my speeches and in my writings, I have articulated it quite frequently, that, if you look at the digital propensity of the population, we have digital natives, we have digital migrants, we have digital fence-sitters, and we have digitally averse. Now, the wealth distribution is exactly inversely correlated. People who have a lot of wealth are probably digitally most averse, as compared to people who are, creating a new job and all. So how do we marry these things will be the challenge before the NBFCs. Now, NBFCs have a couple of more challenges. If we look at the latest financial stability report that has been given by IMF on Australia, it's quite instructive. It says that Australian economy is doing very well. Australian regulation is doing very well. But the problem is, every one of the players is following the same business model, which is 65% resi business financing and 11 to 12% of commercial mortgage financing. Now, whether the NBFC sector is following same business model, it is also a fact to be seen in the commercial banking. Everybody burned their fingers in the commercial financing, so they went to RAM, retail, agriculture, and MSME. So majority of the NBFCs, what I'm seeing today is that acquire to sell or originate to sell. How to keep these accounts current and performing for 6 months, find out a bank who is hungry for those assets and sell it off. And so AUM, and the leverage is the part of the earning, and that propels the return on equity. I think this model needs to be diversified. This is the time that whether everybody is going in the same herd mentality of increasing the AUM book, increasing the co-origination, and looking at absolutely what I call telling the digital story rather than implementing on ground. I'll tell you, I'm dealing with all types of NBFCs, and I have large NBFCs, I have small NBFCs. It takes endless amount of efforts to transfer the loan documents, to transfer the NACH mandate. So digital capabilities, when, as they say, hamam mein sab nange hote hain, I think digital capability must be examined with, hands on the heart, that whether it is catering to the requirement. So, and appropriate digital technology is more important Then hypes like artificial intelligence, and many of these I have found are good to be told in investor meets, good to be told in these things, but we must have on ground capability. Else, we will only be hoodwinking, we will be walking from one crisis to the other.